We are live.
All right, from the top, we just had a little bit of stream difficulty. Sorry about that, but I was mentioning that we had a very unpredictable, inconsistent, and mostly disappointing week that we just experienced. And I'm going to be navigating what the metrics are showing for those who are new to our stream. We are not investment advice givers, but we are metric analysts who are here to help guide you through what the on-chain and social metrics are indicating now and finding those divergences that historically have proven as to whether markets are looking bullish or bearish at any given time. So keep that in mind. Our founder will be in Maxim in about 20 minutes. So get ready for his perspective as well. I'll give mine in the meantime. And we can begin here with our data screener, which kind of shows obviously the price changes over the past 7 days, social volume fluctuations, and organizes things by market cap so we can get a very easy glimpse as to what's been doing well, what the trend is. And there's one clear outlier, and if you were a Trust Wallet token holder, as the FTX news broke about 10 days ago, congratulations. At one point, I think it was up to about 120% over its original price. It's still sitting at about plus 96%. So it's doing quite phenomenal over the past week as people continue to look for self-custody solutions. And Trust Wallet was one that CZ Binance himself advertised pretty heavily. I'll actually show you an insight that we put out about it really quick just a few days ago, because it's quite interesting, and obviously that's what the thumbnail is about on our This Week in Crypto today. So he put out this tweet here saying, Trust Wallet, your keys, your coins. He retweeted his earlier post where he said self-custody is a fundamental human right. You're free to do it at any time. Just make sure you do it right. Recommend start with small amounts. Mistakes here can be costly. Stay Seifu, however he pronounces it. And, you know, there was a little bit of initial backlash because there's some actual vesting that he has in Trust Wallet. He replied that it's open software. Long story short, there's a little bit of doubt in how valid Trust Wallet is to be the solution to having your own keys while avoiding exchanges and still being able to do some token swaps. But Trust Wallet does have some validity, just like MetaMask does. And there are plenty of other alternatives to my Ether wallet. But right now, Trust Wallet's getting the hype because Trust Wallet's the one on the map thanks to arguably the most powerful person in crypto, giving it some spotlight here. So this was, of course, a few days ago, but you can see the impact that CZ had when he posted this, and we immediately saw trading volume go up. Prices were already going up, and then CZ's post just brought it to another level. And, you know, that's crypto for you. It's a very reactionary, sometimes dramatically overreactionary sector where we see something cataclysmic happen, like the FTX implosion, which people are not overreacting to. That was a massive, apocalyptic event in crypto that threatens the trustability of the entire sector. But what is arguably a reaction is the fact that exchanges are now untrustable and can no longer hold your coins without you fearing that they're all going to be gone. This is, of course, an opinion, not a fact. And yes, there are likely other exchanges out there that could and may go the FTX route one day. And that is a scary, scary thought. But we have to keep in perspective the fact that really this is the first time since Mt. Gox that we saw a top 10 exchange sort of implode the way it did. And this was a much different scenario than Mt. Gox because of the fact that this was not hack related. This was essentially a crypto exchange that was running like a Ponzi scheme and was showing signs of red flags. And Sam himself was actually on interviews talking about how he was handling funds in a not so legit way. So there were some warning signs. Obviously, people who did get impacted by the FTX implosion, we don't, many people are preaching that, you needed to learn a lesson and all that. I think that is unsympathetic and a bit disingenuous to say that, considering how many people were impacted. This was obviously not as transparent as many people are now looking at it and thinking told you so, all the crypto bros were too greedy, all that stuff. But in the end, we need to be constantly learning from history in crypto. And this one taught us that we need to be more, we should demand more from exchanges, right? We should find out exactly how their solvency looks, even have proof of liabilities where possible, so we can know just how close a crypto exchange may be to having some kind of implosion like this, so that, as exchanges start to get their legs back and people begin to feel safe leaving their coins on there again, they can do it with transparency, knowing who they're leaving their keys with as they make trades, because exchanges at the end of the day are needed for coins to, or market caps, I should say, to grow. If everyone literally is just holding their coins in wallets, that means there is no circulation. And circulation, daily active addresses interacting on the networks, these are the kind of things that actually drive prices up or down, or anything in between. So as much as the trust wallet trend is hitting the crypto mainstream right now, and understandably so, and it doesn't mean they're incorrect or even overreacting. What this does mean is there is money being pulled off exchanges, obviously, for FTX and anyone who had money on there that was forcibly done so. And, condolences to anyone who was impacted by that. But now we wait and see exactly how much of a big trend this will be in terms of people looking at self-custody as the new normal rather than keeping coins on exchanges. I'll show you our mid-month report that just dropped about 8 hours ago. We posted it on our Discord and on Twitter and on Telegram. So if you're on any of those, you likely saw this posted. This is exclusive to our Sandbase Pro members, but if you're watching this stream right now, congratulations. Even if you're not a Pro member, you get a kind of a sneak peek and a look through what we wrote. And there's a lot of perspectives that we can take. Alex Kruger, someone we really respect at Santiment, he mentioned, the not your keys, not your coins mantra that many of us have heard many times. But at the same time, he is correct when he points out that more crypto has been lost by people who lost access to their private keys than by exchange theft. That is a fact. And it indicates that even self-custody and hot and cold wallets, they have risks because you're relying on your own ability to ensure that you keep your keys safe. If you lose those keys, there are no replacement keys coming your way. The address is essentially just gone with all of your coins in it. So if you are someone who is moving your coins to, cold or hot wallets for the first time, or at least it's something you haven't done in a while and you're not used to it, just keep in mind how important it is to keep keys safe. Most, including myself, recommend not keeping them anywhere on the cloud. Many suggest, a printout somewhere, keep it in a safe, whatever you have to do. Everyone does it differently. There are many, many resources that you can look up in terms of ideas that are very legitimate. Reddit, in my opinion, would be a very good source. Never give your keys to anyone who requests them, saying that you're going to be more secure if you follow their lead. That's not how it works. This is a solo game in terms of keeping your funds safe. So that's what I want to say about that. In terms of other things that were discussed, We put out a poll a couple days ago to ask exactly what percentage of your crypto is held on centralized or decentralized exchanges, and over 50%, about 52% of you answered that you're holding a third or less of your coins on exchanges now. That's significant because we did a poll maybe roughly a year ago around all-time high levels. And I wish I had the screenshot, but it's too far back and too archived. And we asked the same question, and I believe it was like over 60% had 67% or more on exchanges. So it was a complete flip-flop. So yeah, I think undoubtedly this high number of people who have very little on exchanges is a reaction to the FTX fallout, and it's a reflection of the distrust that people have in exchanges in general and holding coins anywhere where they don't have direct access and solo access to their keys. So very interesting to see there. Don't forget, by the way, there is Gemini news too. There's been a little bit of misinformation. Many people think Gemini is going the same route as FTX and they're insolvent. My understanding is it's only affecting like the loan side of the exchange. And this is unfortunate because there are a lot of people who have loans there who may have lost some funds, but it's unclear as to whether they're going to be returned right now. So that's been an ongoing thing as well. But if people are classifying Gemini in the same group as FTX right now, that does not appear to be the case, at least as of now. There has been no definitive news that would point to these two exchanges both being in the same bucket of, imploding Ponzi scheme related exchanges. So just keep that in mind, but there is still more to reveal in terms of what has happened with Gemini. We've also talked about the exploiter address, which many are actually pointing to potentially belonging to Sam himself or someone in the FTX former staff member group who may be meddling funds and trying to and successfully moving a lot of existing funds from FTX into this wallet. And we saw about a week ago a report that suddenly FTX was hacked, and all of this was getting even worse, even though withdrawals were likely to never happen. Addresses on FTX were now being hacked, and funds were being moved away and into what was likely this wallet and probably a few others. And we can track this wallet and actually see in real time exactly what it's doing. And as of now, they went from being an address with no funds on it to on the 11th, suddenly adding an absolute ton of DAI and Ethereum here. DAI in yellow, Ethereum in pink. You can see they also had Pax Gold at one point. They liquidated some of that, and most of it is being moved into Ethereum, where currently there's about $294 million of Ethereum in this address. The entire address has about $308.3 million in valuation right now. 95.3% of it is in Ethereum, 4.7 in PaxG, and very little of the rest. Just a little bit of SOX, USDT, and Pickle, which is interesting. But regardless, we can actually watch this, and I'm sure many people out there are watching on their own, Etherscan links or what have you. Hopefully law enforcement is watching it too, because it's very interesting to see that an address is just filling up with crypto and nobody can do anything about it. But if it is traced to, a former FTX employee or Sam himself or someone in his inner circle, that just thickens the plot. So that is something to watch here. We also put out this post recently, and it was added to our mid-month report about how social dominance has been impacting
whether prices are recovering or not in the year 2022. This is the past year of data. The green bars here indicate high or low levels of Bitcoin's percentage of discussion related to other assets. So when green bars are high, that means there is a relatively high level of Bitcoin discourse compared to itself over time. So it had the most discourse here in mid-June all the way up until maybe late July. And then these other bars are all exchange native tokens. So the blue here, for example, is crypto.com and its native token CRO. And you can see that when CRO went high here in April, all the way until early May, there was a big drop. Yeah, you know, this is kind of cherry-picked data, and it can easily be refuted as a bit of a small sample size, what have you. But this is basically just all of the native tokens, lowest to highest social dominance points over the past year. And there's quite a clear pattern that when there is a high level of native tokens being discussed, it's usually not for a good reason. And it's usually because there's some liquidity concern about these native tokens. Many are just calling them scams, which of course FTT turned out to be exactly that. So that didn't help things. But when you see these high points, it seems to be a very common theme that prices drop when native tokens are being discussed heavily and Bitcoin is not being discussed heavily. When Bitcoin is, and you see these high points, that's when you actually see these rebounds happening, which there have not been many in 2022. So it could be a very, very nice thing to keep an eye on as a bit of a macro indicator. This is a week by week chart here, not a day by day or hour by hour. So keep that in mind. But, you know, crypto.com having social dominance, price dropped. Binance and KuCoin here in August and September, price dropped. FTX, obviously this one goes for many being discussed often. This was arguably the biggest exchange collapse ever. In fact, I don't think that's arguable in terms of the money lost. So just note that when exchanges are being discussed often, it's usually not for a good reason. And it usually is coinciding with price drops. So we want, ideally, if you're a bull, to see healthy amounts of discourse related to Bitcoin all the time, and that leads to success. And I have a chart here that I can show you that kind of reflects that. So this is the last 6 months of Bitcoin's social dominance, and this key line here represents 20% of discussions related to Bitcoin. When it's above this line, that means over 20% of discussions are related. When it's below, that means under 20% of discussions are related to Bitcoin. So we've only had a few moments in the past 6 months where Bitcoin's social dominance is well above. And when that happens, prices generally bottom. When it's well below, prices generally top, and it leads to a downfall. Usually this is because there's just a euphoric amount of discussions related to altcoins, which are fluctuating 2, 3, 4, 5 times as much up and down. So when people are trying to catch the wave up, they often are jumping into alts instead of Bitcoin, and that is reflective of greed and euphoria. And when we see greed and euphoria, that almost always leads to downfalls. So this is kind of one way of looking at greed and euphoria through the lens of being in a relative safe haven compared to altcoins, which Bitcoin is. And when that relative safe haven is being ignored and everyone thinks Bitcoin is boring, that's when prices tend to come down because people aren't being patient enough in the markets. So yeah, we want to look for regions like this where prices were bottoming because everyone was talking about the FOMC and inflation and recession concerns here right after a huge price crash. Suddenly that really bolsters the amount of interest in Bitcoin unless people are talking about Dogecoin and Shiba and Cardano and other altcoins. so that's really what we want to see, is a high level of Bitcoin discussion here, and even arguably a very short time where it was kind of spiking into a good region for the social dominance of Bitcoin here. But for the most part, we're staying low. You know, this was a bit of an encouraging sign here, but it quickly dropped back down. You can see the prices even were rising as this social dominance spike finally came, but then it quickly came back down, and we're only seeing about what is that? Yeah, like 6% of discussions at the time this snapshot was taken. Actually, this isn't a snapshot, this is live, excuse me. So yeah, only about 6% of discussions are related to Bitcoin at the moment in terms of assets only. So yeah, a little concerning still, and we would ideally like to see it in the positive range there. Is Maxim here yet, by the way? It sounds like a no. All right. All good. So I'll continue down and show a few of the other key points we made in the mid-month report. This is just the overall amount of discussions related to exchanges. So we've got Binance, FTX, Coinbase, Crypto.com, and KuCoin. I know there are others. These are kind of just the top 5 in terms of discussion rate that we've been seeing over the last month. And, you know, they generally are regarded as 5 of the largest. You can clearly see a big shift right when the FTX news broke. FTX, of course, in red here is the one that exploded with discussion. And we started seeing an increase in discussion as to what other exchanges are viable, which is a natural reaction. People, whether they're on FTX or not, they're immediately putting a magnifying glass on other exchanges to figure out whether they might be imploding too, whether they can be trusted or not trusted, whether they're solvent or have you know, some concerns. And that hasn't stopped. I mean, this was taken on the 14th, but you can see the uptick in KuCoin in particular, having discussions at a much higher level than it was. We had Crypto.com before the collapse, interestingly. Binance has had its moments. They really all have, but you can just see by the colors firing off here ever since the November 8th news about FTX happened. Yeah, there's been a much higher level of exchange discussion. So that's kind of another way of looking at the social dominance token discussions. And I'll go back to our sand base here for a moment to show off this one. So,
hey.
Hello.
Thanks for holding. Yeah,
how's it going, Max?
Safely. Sorry, it took longer time.
No worries. How is your take on the markets looking right now? What do you think about all the madness that's been happening since the news happened on the 8th?
This is a this is a big question, right?
Huge question, yeah.
Yeah, long one. Complex one. There's been enough blood on the streets, so to say, liquidations. This time, combination of both unfortunately, retail users who've been customers of FTX, but also institutionals, which is kind of not so common. Mostly institutionals dodged the bullet. This time they could not. And this level of liquidations or removing of liquidity from the market should normally lead to even lower prices, but yeah, market is smart. It was priced in even before all the details came out. So possible. This is it. This is the bottom. But if it's not, still based on the all truth, bloodness, that you buy liquidations on the street on this level. Yeah. I consider it to be as a buying opportunity. And but we cannot rule out, of course, further declines. Yeah.
Mm-hmm.
Yeah. Yeah, it's if in the short.
Yeah.
Did you say about already the fact that we are decoupled, if even not in a good sense, from stock market?
No, I wanted to go over that right after we touch on this whale chart here, and then we can kind of
Let's
look at
touch this. Yeah, first,
yeah,
then we go to
for sure. So right before we jump into how crypto has decoupled from the S&P and equities and gold and all the things that it's been closely tied with all year long, we can look at what whales have been doing here between Bitcoin here in dark green. This dark green area chart is the percentage of 100 to 10,000 BTC addresses and how much they're holding of the overall Bitcoin supply. And it's been declining rapidly, even going back to October, which was I'll even go back to 1 year here. But October of last year was when we were holding the most, and it was really topping out. The whales were holding the most, I should say. So this was right around all-time high levels in November. And then we see the dark green line begin to decline. This is the percentage of the supply held by whales. And it's gone all the way from about 49.1% held to now 44.2%. So just about 5% less of the supply is held by these key stakeholders. And it's kind of accelerated in terms of its drop ever since late October, even prior to the FTX hack, or implosion, I should say. So that's a concern for sure. But on the upside, we do see that buying power has exploded here. And we're looking at 3 different stable coins represented by the blue, orange, and red line. And all 3 of them have seen upticks going back to different points in the year. For USDC, USD coin, look at what happened beginning in late October. This was already before the FTX stuff went down. They were holding 35.35%, those addresses that hold between 100,000 to $10 million. So shark and whale stablecoin holders. And now they're up to over 40%. So they've added almost 5% to the supply just in the past 2.5 weeks. And then this orange line here is BUSD. Now this appears to be likely more related to the FTX situation, because for those who remember, in the days leading up to the November 8th announcement of FTX collapsing, Binance was in talks with Sam, and they were having a very public revealing of how a potential buyout would be working, which of course CZ eventually pulled out of because he identified that Sam and their exchange did not have the financial reliability and solvency that it was supposed to have for this buyout to work. And so he was no longer comfortable buying it out. And in the meantime, the native tokens of Binance were getting massively accumulated here. There was actually a huge BNB spike in price, about a 20% spike a couple days before the announcement happened. And in the meantime, 2.37% of BUSD, the stable coin used for Binance, all the way up to a high of 5.16% a couple days ago. And it's pretty much right there still. So, I mean, if I drag this over to here, yeah, that's they more than doubled their holdings just in the span of about 12 days here, going up 117% during that time in terms of how much they were holding. That's, of course, significant. It's very reflective of the fact that holders on Binance that have a lot of potential buying power have a lot more buying power than they did just a couple of weeks ago. And it's something to monitor. Even with the Bitcoin whale supply continuing to shrink, it's indicative of something brewing here. And, Tether here, less to say other than the fact that it's continuing its 2.5 month long trend of getting more buying power into whales' hands. So that's a good sign too. But particularly USDC and BUSD seem to be the story right now, Maxim. I'm curious if you have any thoughts on this.
Many thoughts. But why do we want? Do we want decoupling, or we want behavior of different groups?
Mm-hmm. Well, I'm curious what you think about the massive stablecoin accumulation that's been going on between the three top stablecoins.
For us, it's always a sign, and the stronger accumulation, the more clear sign of a fear of further decline in the market. There is, generally speaking, there are details, and we will come to it. But generally speaking, when someone accumulating stable coins, it means he thinks the price of crypto will go down, so they can buy cheaper. Or he wants to realize the profits,
right?
Because he thinks he will go cheaper. So this is the main, generally speaking. And unless there are some other concerns, such as if we would show only USDC or only USDT, then of course you need to consider, oh, maybe people are going from one stablecoin to another. Sometimes, USDT is under attack. It happens a few times a year. And then some people who are concerned, maybe rightfully so, they move out of USDT to USDC or DAI, and things like this. But here we show all of them, USDT, USDC, and DAI. And if all of them growing, okay, this can be removed. This consideration. Yeah. And the spike is huge. Yeah. Actually, I didn't see this piece. I guess is it which one? It's Binance.
That's BUSD,
okay, because
the one that really exploded.
They converted, so to say, enforced usage of BUSD for the price of others. Looks like for USDT. Yeah. Actually, you can add to this chart also. I believe it.
Yeah, I'll go ahead and add it. Might as well.
The same picture. So we should consider, of course, this huge spike on Binance dollar. It is a result of them kind of pushes they used to use this. Still, the trend is rather clear. Balances are growing. They're not buying the dip. Yeah, this is the thing. We don't see this behavior so often. Price go down. No, there is no buying dip. There is only increasing accumulation. People are selling this decline, which is, once again, it's a blood on the street, or they feel like there is a blood on the street, and there will be even more. So no guarantee. I cannot say if it's 100 or 80% assurance we hit the bottom. Maybe we're not. But this is an environment condition where you would normally think, okay, cool. I can do dollar cost averaging. And by the way, dollar cost averaging should be done, in my opinion, when not just blindly every week, every second week. No, there are always declines, and this is where you should do dollar cost averaging. Yeah,
it's never a bad idea. But yeah, DAI, as you recommended, it's pretty much going the same trajectory as Tether. There was kind of a big shift when Tether had that decoupling back in
this
early May.
People exactly
DAI
where
went
people
way up,
moved
Tether
to
went down.
DAI. Yeah, at this stage, you can actually see in one chart out of Tether into USDC and DAI. And then things changed. People were buying the dip, at least in USDC, looks like, because balances decreased. Or actually not. It's a very interesting story. I remember we analyzed it. These people really decreased market cap of USDC. So, and I remember it was big addresses, quite big, even bigger ones than this, which we show in the chart, which showed they moved out of crypto into the real fiat, because the yield on the US government bonds now became more interesting than what you can get in crypto. You can get in Treasury, US Treasury, which is by definition the most safe investment, 3%. If you do short-term, like 3 or 6 months, you can get even 4%, which is this inverse rate is another topic. But people moved. This yellow line, which you see after strong spike up down, this is people move out of crypto into stable financial system. Yeah, I remember this nice story. By the way, MakerDAO did the same. Yeah. They, I see 500 million invested into US debt and some corporate.
Oh,
so
yeah.
that was the first sign. Okay, some serious money have been moved out. They are not interested, or there are no interesting investment opportunities. And the second one, carnage of FTX. I mean, this is an environment where you at least do double cost average. Yeah.
Agreed. But, you know, it's a mixed bag with stablecoin accumulation being quite glaring right now, which is not the worst sign, right? There is an alternate route where we see Bitcoin whales dropping their Bitcoin, but stablecoins also going down. In May. Like, this was a very concerning sign when we saw DAI going down and Tether going down. Yeah, I mean, BUSD and USDC, they were looking okay, but when you see two of the four biggest stablecoins really dropping, while Bitcoin is also dropping in whales wallets, that's a sign that it's just moving completely out of crypto and into either equities or into other investment ventures that don't have relation to, you know, potentially buying the dip and just storing more and more buying power. And now we're seeing where they're storing more and more buying power as they drop Bitcoin, which is a better scenario than what we were seeing before. This is obviously a pretty unprecedented time with the second largest exchange imploding. So everyone is taking their own route, but it appears, especially with BUSD and Binance, they may be a main beneficiary. And when, you know, whether it's someone on CZ's staff or CZ directly, who knows, but as their buying power, it could be a big rip up because of the amount that's been accumulated, over 117% in just the last 12 days. All right, so besides whales, let's go back to a few other notes we had. We mentioned that volume on exchanges is not really dropping off at all. So the perception that many people are moving their coins into Trust Wallet, which Max, we talked about earlier, not be the case, even though there's an increased discussion and interest in it. And I've even heard like Ledger wallet purchases and Trezor wallets that are up like 3x compared to before. So I've even heard 4x, 3 to 4x. It doesn't appear that it's impacting exchanges being able to put up big volume numbers. And that's a good sign. It certainly means that active addresses, they're still transacting on a regular basis. Certainly it's not where it was last week, where there was just a year high, or I think it was actually the high since May, because there was a big scramble in May after the biggest drop of the year. But regardless, volume looks fine. It doesn't look like, it's not even below where it was in early October, when things were relatively stable and prices were mainly just chopping and getting boring for people. So unless we start seeing trading volume really start to contest what was happening there, I wouldn't be too concerned that, you know, vacated right and left. I think that's a bit overblown at this time. Now on to the topic that Maxim brought up, which is the decoupling of crypto from equities. And this has been a long time coming. Throughout 2022, pretty much since late January, we were seeing a very, very tight correlation between Bitcoin and Ethereum here compared to this teal line, which it represents the S&P 500. They're all on their own axis, but in short, they were following very closely to one another. When the S&P was going up, crypto is going up. When it goes down, crypto goes down. But you can see right here, right about there on the 7th, right when there were rumors that FTX was going to collapse before it was actually announced on the 8th. We saw a day where crypto here had a huge drop and the S&P had a huge rise, or at least a modest rise. And then, of course, the FTX announcement happened, fell off a cliff. The S&P had a bit of a down day, but look at this rebound. The S&P basically hit another 10-week high here, while Bitcoin and Ethereum stayed very low. And this may seem like a big red flag, a big concern that crypto is falling behind and equities are the better investment. And it's up to you to decide what you think is a better investment. But what we can say is statistically, when this kind of decoupling happens, it's generally a good long-term indicator for crypto to be able to have a bull run without the reliance on equities, the way it's basically been tied to throughout 2022. When crypto has zero correlation, no positive or negative correlation to equities, that tends to be when the biggest bull runs and the best opportunities present themselves in crypto. And Maxim, I'm sure you have something you'd love to add to this point, but it's pretty interesting to see this gap right here that formed over the past 10 days or so.
Yeah, it's interesting, unexpected, and I believe quite some people got burned, expecting after stock market started to went up, expecting crypto to follow, but we have our own story to develop.
Yeah. Well, the suggestion is there might just be a delay, right? Maybe after the dust settles, crypto could make up ground.
But the delay to which direction? Maybe crypto moved first, and the liquidity, and now stock market will follow to experience the same liquidity crunch, even though for them it's difficult. These governments can always jump in. But it's possible that stock market will follow for some time and we both go down, or crypto market will follow and join the rally up. For the first scenario that stock market goes down, this is what our inverse interest rate actually is speaking for. Inverse interest rate, if you take 3-6 months on US Treasury, it's yielding, if I'm not mistaken, I'm just checking right now. So 1 year, 4.5%, 3 months, 4.25. It's higher than 10 years, which is unusual. So what it says is the market believes, short term, still possible to increase, but the market's already priced in that over some period of time, 6 months or whatever, 1 year, the Fed will have to stop raising rates, will have to start cutting it. And the reason why it, of course, one way you can say inflation is under control, and we've been repeating it for a very long time. There will be time when everyone will believe inflation is under control. It's not there yet, but the data reveals we will get this feeling, or let's say the crowd will get the feeling we have inflation under control. But it could also mean that there will be no other way to fight against recession that to lower this rate. And it means there will be a recession, the real one. Not yet on horizon, and it's options. All options are open. As once again, there are two options. One, inflation is maintained or contained and starts going down. And but the other one, we are facing very rapidly into recession, like very rapidly. And market pricing, in fact, will have no other choice. They will have to bring in cheap money. And cheap money, it's an interesting topic, yeah. You know what cheap money means? It's pump. But recession might mean first some dump. I mean, it's, you can speculate now the way any way you want, and it's everyone's guess where it go. Coming back to where we started, correlation, it will correlate back to closely very soon, I believe. And we might see it in a few weeks again, very tightly correlated. Need first to remove this. side effects of FTX capitulation.
Yeah. I mean, at least for today, which isn't going to show until markets close, we're seeing another day where the S&P is having a good day, and crypto is kind of stuck in the mud. At least since the call started, yeah, it's crypto's chop, if not move a little bit down, while equities are rising. So this is continuing the trend of a bit of a gap forming between the two, where one of them is going to have to give. Either crypto is going to lead the way, or the equities are going to lead the way, or there's just no correlation anymore, and they're both going to fluctuate on their own. And that third option would be the one we're rooting for, where it's indicative of uh, cryptocurrencies no longer having a reliance and a dependency on how healthy um, U.S. or just world markets are looking at any given time, and things like FOMC decisions, inflation, recession concerns will no longer impact crypto the way they have. Will impact it less.
Mm-hmm. Yeah, true.
A few other topics: realized loss. Big collection of losses have been forming. This is understandable with the implosion. I don't know how much of it would be related directly to coins being lost by individuals, though. I think this is actually people, and you can correct me if I'm wrong, Maxim. I think this is people that are basically just trading out or liquidating their existing crypto as a reaction to the FTX implosion, not the FTX addresses themselves recording losses, which is possible. But I think this is basically just it's a FUD reaction. It's people that are getting out of crypto because they no longer trust that their coins can be kept safe, whether they were on exchanges or they just don't want to be in crypto after this latest drop where we saw new 2-year lows.
Yeah. This I think this time we should treat this drop in net realized profit loss a bit differently. Normally we say, okay, this is now pain in the market, right? It's still partially true, but the second part is self-custody, and depends. It's a lot of movement. We've seen it on many coins out of exchange to the private wallets, and God knows when these coins moved into the exchange wallet. Possible they're now moving out at a nominal loss, but they're not selling them. They're just keeping them. It's self-custody, which we'll see everywhere, and which in turn even not long-term, mid-term is, as we like to say, good for crypto. Self-custody is the way. The moment you imagine all this liquidity, all these tokens moved out of exchanges. Now, we've seen DeFi development over the last already 2 years, and now they have even more motivation, or let's say more fuel, to kick off or scale protocols we've been developed in the last 6 months alone. I've seen so many protocols in DevCon, and I'm reading here and there about so many cool things. Now the liquidity is here. It's not on exchanges at the moment. If the crypto gods planned it in a way, now we need to show you something so that you finally move out of exchanges and utilize all these cool things which have been built in the last year. And there are really quite some amazing things. Just didn't have enough motivation for people to park their money there. Now it might happen. And if it happens and gets some traction, my goodness, it's it's always word of the mouth. It can accelerate very fast. Ethereum could be the king. I mean, for me, it's always with Bitcoin the king. Sometimes bigger, sometimes smaller than Bitcoin, but all the things which have been built, if they're working now with attention of much more users, cool thing.
Yeah, and the last thing I pointed out in this article is look at this huge ratio of lost transactions versus profit. There are 3 times as many transactions happening at a loss compared to at a profit right now. And that would be historical if the ratio keeps up. which it may, if people continue to just drop out of crypto and move their coins at a loss the way they are right now. It could be, one of the biggest capitulation signs we've seen. And it definitely shatters, at least for now, it's shattering the previous year high, which happened here in mid-June, right after the massive drop, a much bigger price drop, mind you, after the FOMC decision. I think this was like their third interest rate rise of the year, and it caused many to just get out of Bitcoin right at the bottom, or at least transact right at the bottom. And then, of course, we saw this big rip where prices went up about 28% over the next 6 weeks. So it's no guarantee, but generally when you see these low ratio of transactions happening at a loss versus profit, that's indicative of capitulation, and prices have a greater chance of bouncing and recovering. So keep that in mind. For those who have a Sandbase Pro membership, feel free to come and check this article out. It's on our insights.santiment.net page, and you can check it out anytime. Leave a comment, let us know what you think. We're always trying to improve and give you the best possible data and information we possibly can. All right, just a few other metrics here, and then we can take a couple questions. We're already at about 53 past the hour. A good starting spot would be the 30-day MVRV, which continues to look intriguing. It may not be as low as many of you would think. The 30-day MVRV points to the average trading returns being at about -6.5%, which does indicate we're in a better spot in terms of small risk by buying right now or adding onto your position. 0% would be an average spot. Anything below is better than average. Anything above would be a more risky time. So we're at about -6.5. Anything below here, let's see, right about there. That's about the -15% mark, right there. So if we get there or below, like we did here on November 8th, right when the news was coming out, that would be a good bottom signal. And we saw the other time here too in June. That was essentially a great bottom signal and a time to jump in. So we're not quite in a huge opportunity zone yet, but we're in a better risk-free zone than we are on average right now. And then look at the 365-day MVRV, way down here at -39% right now. And it's been in a long-term negative zone for about 5 months straight now, which indicates that when dust finally starts to settle and crypto is at least out of this long bear cycle, there's a lot of room to make up here in terms of long-term trader losses in a metric that normally hovers around 0%, no matter what time interval you're looking at. Considering we're in a negative zone now, and pretty severely so, there's a lot of room to make up to eventually get that 365-day MVRV back to 0%, which at last was. It's been, well, I guess very briefly, it was in late March, and that was the only time, other than this 3-day stretch in March, maybe 4-day stretch, it's been below 0% the entire year. That's how long it's been now. So yeah, this is a pretty extended and unprecedented bear cycle that we're in, going on a little over 12 months now. It's past the year mark since we were at the all-time high now, which happened back on, I believe it was like November 9th or 10th.
And if you take 2 years, how will it look like?
Mm-hmm. Here's the 2-year. So you can see the all-time high. We had an initial one in October, and then another one about 2-3 weeks later.
2 years. Do we have it?
Oh yeah, sure. Let me add that. Here's the 2-year. We're going to add it here in blue. I'll just take the other two off. So yeah, the 2-year MVRV is pretty much at its lowest point in the last 2 years. Let's even go back to like
Yeah, that's quite extreme.
Yeah, this is pretty historic. November 2nd, it's on the weekly scale instead of daily now, but yeah, November 2nd, by far,
history
we're in the
in
lowest,
making, yeah.
big time.
Okay.
So last time we saw the 2-year MVRV this low, we were bottoming out in December of 2018, and then we watched prices jump just a cool 273% over the next 5-6 weeks. But, you know, that won't always be the case. Just means that the likelihood of a bounce is increased according to this metric when you see it this low. Funding rate has been crazy. We don't need to really jump into that. That's weird. Seems to be delayed for some reason. That's okay. I think it's because FTX.
Yeah, you need to remove FTX from formula.
We have
I have
to
the same
that.
on my side. Yeah, you can then
see,
check later on.
just
you need to update formulas. Everywhere where we used FTX, you need to remove it.
Yep.
Because it breaks.
Exactly. And I'm working on updating our funding rate sand sheets model for exactly that reason. But DYDX, you can see it actually went long briefly and now is back short. Deribit. Let me switch to filled area. Yeah, pretty much break even.
Not much.
And then we'll just check out Binance. Yep, it's very flat. But you can see what happened here on the 9th, the 8th, 9th, and 10th. They all went super short. And you can see how prices bounced right as they were doing that. All right, we're just about an hour in. So why don't we take these last 10 to 15 minutes and answer a couple of questions from the crowd.
Yeah, I see it a few times.
Sure.
Asking. Actually, it's interesting for me too. Uniswap is one of the top 10 considerations for the next wave, even though they have one weak point of how they manage their treasury or how they let people to see phones from there. But
yeah, let's check it out.
Maybe it will change. You know, it was still behavior from bull market. FTX, including the many projects, just expense level is huge. Hopefully, they will reconsider it. Yeah. So people ask, active address, record circulation, funded rate, well holding, sentiment, and social dominant. Yeah, we can check this stuff. I think Degenich was asking.
Sure. Yeah, it appears that Uniswap is seeing, like many assets, it was seeing a big spike on trading volume on the 8th, and pretty much for the following 3 to 5 days, we saw big spikes in on-chain transaction volume in both dollars and in Uniswap. It's come back down to earth now, but this was pretty much in line with most tokens, especially if they existed on FTX at the time. Not much out of the ordinary there. That was simply a reaction to one of the most catastrophic events crypto's ever seen. Same with daily active addresses in circulation, big spike here, especially on the 13th. That's interesting to see. Pretty much, I think this was the largest of the year in terms of spikes. Circulation has kind of come back down to earth. Let's take a look. While we're here, I mean, 2-year MVRV is sitting at about negative 68% right now. It got to as low as negative 74% before bouncing a bit. Your MVRV tends to move pretty slow, and it's still showing a ton of meat on the bone and room to make up for right now. Let's look at the shorter term here. We'll look at the 30-day. So yeah, the 30-day is just about even. It's sitting at negative 0.8%. So not a big risk or opportunity zone at all right now. Pretty much right there smack dab
for trading,
in the middle.
Yeah. If it's short-term trading, it's nothing interesting.
Right.
But yeah, we can think of, is it an interesting level for your, say, 3 to 6 months portfolio? Yeah.
Hodling.
Well, hodling is always good. You know? But
yeah. But particularly now, because of the fact that the MVRVs, long-term MVRVs, are so historically. We do see a bit of longing going on for at least DYDX. Binance, not so much. It's pretty much break even. But yeah, DYDX, it's just look at the last week. That's a little bit of a long bias, not by it was here, and you could see how prices were dropping, like most altcoins were over the past couple of days. But interesting to see that there's a bit of a very slight long bias going on for Uniswap.
The good thing is, if you increase this chart, there is actually not, it doesn't look so bad. No, I mean increase like full screen.
Got it.
And then shorter time. It's too long time. Like again, yeah, last month and then increase. Yeah, you see how when we were bottoming out. So the first wave, people get excited, but a kind of good sign when we increased the price. The level of excitement, which can be measured here by founding rate, didn't get too high on a current top. Let's go to the top. It did spike a little bit, but still not as high as before. So we could think of people not convinced, to long it, which with some patience applied. Based on this chart, how it looks a little bit below 5 and 5, would probably make a good entry point. And also on this chart, we can see what are really dangerous excitement zones. This is spikes. November, 13 November. See how much was it? That was high. Yeah.
Went up to 0.0104.
Like, this level, and then another spike, and the one on 16 or 17 November. This level, I would pay attention. Yeah, or be careful. As long as we're not there, okay, it's worth considering.
Right. So you can kind of draw a line
it's
right
just
around
visually
there,
you see it compared to where we've been before, and it kind of gives you some sign.
Right. But I mean, if we start seeing a grouping of shorts going on like this, that's a very good sign that we could see a breakout.
Yeah.
So it's been a tale of two times over the past week, very short and then very long. And right now we're kind of very modestly long, but this is close to break even. Whale transactions, there has been a rise, like most assets of large assets, just like on the circulation and daily active address end. Not a surprise there. Let's take a look at what the key stakeholders are doing. So the price is sitting at about just under $6. So we can look at addresses starting here at 10K, 100K, and a million. And overall, it looks like Uniswap, the address is holding between 10,000 all the way up to a million. There has been a pretty big rise before the implosion of FTX beginning on the 6th. We started seeing a big rise, and that's continued where there's been about 6.5% more addresses that hold between 10,000 to 100,000. That's a very good sign. And then on the 100,000 to 1 million side, pretty much since last week, we've seen a 7.1% rise in this amount of addresses. So also a very good sign there. The yellow line, 1 million to 10 million, that's about even. And now let's take a look at the balance of addresses. We'll do the same tiers. And let's add the price too, so we can get a little context. Oops, wrong one. Okay. So this is in green, this is the price of Uniswap versus Bitcoin. So we can see when it's actually rising against the rest of the markets or not. So it looks like, just by eyeballing, it looks like it might be best to merge all three together. So we'll do that. Boom, boom, boom. Confirm. We'll get rid of these. So here's what the key stakeholders are doing. They really started to accumulate. You can see how price was rising. As it dropped, we saw even more accumulation. They stayed pretty flat here from late August all the way until mid-October. Then we saw this sudden drop off.
That's good. Yeah.
And now it's back. Yeah, so it's kind of been indecisive over the past month or so, but overall it still looks like it's quite high compared to where it was back in May. Let's even go back a year. Yeah, I mean, it's on a long-term rise here. We clearly see it's moving in the right direction. And that's a good sign. I mean, just under half of all Uniswap is being held by these key addresses that hold between, I don't know, $60,000 all the way up to $6 million. And that's a very key region of traders that often control the markets when it comes to any altcoin out there. So I like the sign of this, Maxim. Any thoughts here?
Yeah, it looks more positive than negative.
Right. Yeah. So whales are looking good for Uniswap. Nothing special versus loss on transactions. Dormant coins continue to not move. We're continuing to monitor and wait for a big drop in mean dollar invested age, which would be indicative of a lot of dormant tokens that haven't been touched in a while suddenly moving. Not the case for now. Like most assets, big drops in ratio in realized profit loss over the last 10 days. This one was more isolated here on the 10th, but hasn't seen as much otherwise. As long as we're not seeing big spikes in this direction, we're in a pretty good place because it's mostly people realizing losses, which is makes the likelihood of a rise more prevalent. Yeah, look at this big drop in supply and exchanges here, Maxim, over the last 2 weeks. There was about 6.56% of Uniswap on exchanges, and
self-custody.
6.1.
Self-custody.
Yeah, 7% less on exchanges. That's a huge drop there. Looks like the biggest of the past year in terms of just how quickly it happened. So it's back to basically the same levels we saw in early August, and that's when supply started to rise. But now it's back there, and that should be considered a good sign. Oh, and we see a massive spike in volume and dominance. So what is this related to, Maxim? I'm sure you know. Still with us, Max?
Sorry, I was muted. Maybe
Decoupling
who asked it. Maybe you know what happened. Why suddenly so much talk about Uniswap? What is dominance?
It went all the way up to 15.9% at one point on the 12-hour scale.
Maybe it's not calculated data or whatever. It's too high to be true.
It's 1 day. Let me zoom in a little.
I mean, I'm definitely not true because even discussion of Dogecoin or Shiba coin or whatever connected after Twitter, after Elon Musk tweets, I think never get above 15%. And this is the most I've seen. So there must be something.
I mean, clearly volume has spiked in the last day. I don't know if it's related to the Twitter stuff where there are bots being set up by some people who are trying to scam, and it's always a Uniswap thing.
But maybe we can ask initially in our developer channel what happened. What does it see here?
Yeah, I'd love to know. Weighted sentiment has exploded, but that's definitely likely related to, it's for sure related to the volume spike that's been happening. And also interesting to see that Uniswap's development activity is starting to look really good again. Let's look at like the last couple of years. So interesting that we saw this huge spike up until May, and then it dropped off, but it still seems to be rising since. So if we just go from May until now, yeah, that's a pretty good sign that Uniswap is healthy and seeing plenty of attempts at innovation and improvements to its protocol right now. And that's about it. I think we covered a lot, Max. Do you have any final thoughts on Uniswap or just the crypto markets in general?
No, well, we can sum up, but seeing people who heard long enough get an idea. Blood is on the street. Double cost average is good. We cannot rule out a decline once again. Sorry, it's not extreme. Yeah, there is of course definitely some risk of discovering along the way, be it more than just Genesis, some other big players belly up. But with every such huge liquidation level, it's a good. It's some sense of discount because people been liquidated. Yeah.
Right. Yeah, it's a crazy time out there. I mean, this was an unprecedented event, folks. Those people who are hysteric about it, there's good reason. I mean, FTX was a massive exchange. Many felt that they could trust it, and they got burned. And there's a natural reaction to not want to hold coins on any exchanges now. I think that feeling will be temporary, and eventually when markets get interesting again and there's some volatility to trade, people will to put coins back on exchanges and potentially leave it there.
It will take some time.
It'll be interesting to see, but yeah.
This time is much serious.
So stay safe out there, guys. We'll have plenty more updates here on our Twitter that I'm scrolling through now. Drop us questions at any time. Maxim and I are on Discord frequently to make sure you guys have questions addressed. And in the meantime, we hope you all have a great weekend leading up to Thanksgiving if you're American next week. Hope you have a great time with family and friends for that if you're one who celebrates. And on behalf of Maxim and Gary, who did a great job running the stream today, we wish you all the best and thanks for joining.
Everyone, have a good week. Talk to you next week.